Just going back to that rare earth suggestion, is that positive? Is supply chain a real headache for the businesses out there right now?
Yeah, absolutely. You know, what we're seeing is a fundamental shift in how the U.S. has really been addressing supply chain resilience over the past few years, and absolutely top of mind following the export control measures by China back in 2025. You know, what in essence we're doing is we're creating a strategic reserve of rare earth minerals for the digital economy, which means that we're less at the behest of foreign entities as we try to continue to move forward, right, in AI innovation and all the potential for the economy that really houses.
A lot of the focus has been not so much on supply chain of rare earths as well as that, but also really just the bottlenecks that we see in delivering the AI hope and euphoria that is built into the market, whether that's power, whether that's energy, whether that's land. Natalie, where do you stand in terms of the reality of AI and what has been thus far driving a lot of stock shares higher this year?
Yeah, absolutely. I mean, 2025, we saw a really intense increase in valuations. There's a lot of hope in what AI can deliver. We heard that at the Davos Economic Forum, also loud and clear by many key tech and political leaders as well. Now, in order for these valuations to hold in 2026, and what we're really going to have to see, and it's going to sort of earmark the year, is a close, right, in the gap between how much is being spent on AI and the ROI that we're actually going to achieve. If we get those productivity gains, then this is absolutely a great story of foresight. If we don't see those productivity gains, then we're going to have a conversation much more housed around capital misallocation.
But Natalie, how's that going to show up? As an economist, are you looking at jobs data? I mean, because at the moment, all we're seeing is jobs cut upon jobs cut, which in some way seems to be going back to AI.
Yeah, I mean, it's fascinating, right? What we're seeing in the overall jobs data, I'll first sort of approach that and then tell you as an economist what I'm looking at. We look at the jobs data, there's not a whole lot of evidence that the jobs that are currently being cut is due to AI, right? We know that that's what companies are saying. At the same time, it's not really showing up in a clear way in the data. On the other hand, what we do really need to see is almost a discontinuous jump in the productivity data, right? So if we're sort of on this level increase, what we really want to see with AI is we're jumping up and then we're on a totally new level playing field. When we see that, and there should be early adopters in some key industries, I'm thinking, healthcare, consulting, finance, we should see those early signals and they should be showing up in the data.
As soon as 2026, you think?
That I firmly believe that's going to need to happen in 2026 in order for these valuations to be deemed worthwhile.
We're going to be getting into these big stories that are in the market today of how, at the moment, we continue to fuel the ever-needing expansion of AI infrastructure, whether it's Oracle selling debt and equity, whether or not NVIDIA is going to be giving up to $100 billion or not to OpenAI. How are you seeing that narrative continue in 2026? Are we going to have to see a pullback in the amount that companies are committing?
I think it's more so we're really going to have to see the ROI in a meaningful way that we can go back to. And again, that gets back to productivity. So, and the risk really is, as we sort of pull all of these levers and they get more and more complex, it becomes a much more opaque environment, right, for investors to really operate in. And so the risk of those valuations maybe being artificially bolstered goes up.
Just from your perspective, the narrative of circular deals, is that actually, in many ways, we often put it in a negative context, but is exactly what NVIDIA should be doing, investing in its own clients to be able to foster the potential ROI that we might see in this lockstep jump?
Yeah, I mean, absolutely, right? So if we see this truly meaningful transformation in the economy that's sort of promised with AI, then we're in a great spot, right? These circular investing schemes, that is excellent foresight by these companies. If we don't see that, right, that's the real risk of pretty significant market correction, right? Because that investing scheme, it is bolstering the overall revenue numbers that we're seeing.
What, therefore, are some more of the headwinds? Other than waiting for ROAI, we're also still tackling tariffs. We're still worried about South Korea's relationship with the United States, for example, in the here and now, let alone China. What could be the headwind that you're looking out for?
One headwind I'm particularly interested in tracking is actually jobs, right? So we're in a labor market overall when we talk about the macroeconomy that's quite soft. But when we speak specifically to AI, machine learning, sort of these high-powered tech jobs, we have a little bit of a bottleneck there. And so something really interesting that came out of the U.S.-Taiwan trade deal just a few weeks ago was this goal, right, of onshoring significant supply chain efforts from Taiwan to the U.S. In order to do that, we're also going to need significant changes in our workforce development. And there's a risk there, right? Because we've had meaningful policy changes over the last year alone.